Hey everyone, Couch Investor back to another video for today. So Teladoc reported earnings yesterday. Good quarter, not incredible, but good quarter. Guidance for Q1 was a bit meh. We're going to discuss that in this video, but guidance for the full year was much better. At the time of making this video, the stock is only down 2.3%, so should take it as a win, especially in this current market environment. So as always, this video will be earnings report, and then at the end, the earnings call, a couple of specific mentions there. So net loss per share for the quarter was 7 cents versus an estimated loss of 56 cents. It's quite a nice beat there. Revenue of $554.2 million versus an estimate of $546.6 million. So they beat on the earnings per share, net loss per share, revenue as well. Now, they are trading at around 25 times free cash flow for this year, and they're expected to grow around 30% all through 2024. To me, this sounds like an incredibly good deal. As mentioned in my last Teladoc video, I really think that Teladoc right now is in this Tesla 2019 situation where they're not profitable yet, but cash flow positive and things are starting to turn to the good. So revenue grew 45% year over year, very nice. I believe quarter over quarter wasn't that great. Adjusted EBITDA also grew 53% year over year, so very positive on that front. And now access fee and visit fees. So access fee grew 51% year over year as well. Visit fee only 21% year over year to $69 million. Now, I know some of you probably already went over this and you might ask, why are some graphs a bit different? I'm going to touch on that in just a bit. Now, US revenue grew 45% year over year to $483 million, while international revenue grew 40% year over year to $71 million. And I believe quarter over quarter, it grew close to 100% or so, maybe even more. And the reason why is because of BetterHelp. That's also why you don't see PMPM metrics anymore. Basically, the company moved a large part of BetterHelp revenue from domestic to international. This obviously messed with the visit utilization rate and also per member per month, the PMPM metric. So this is why you're seeing a difference here. But overall, everything is going on the way up. As for Livongo member data points, they're now over 2 billion data points. Very nice. Utilization, again, the metrics here are a bit skewed, 22.7%, also on the way up. Visits on the way up as well. And platform enabled session, obviously we can see that it has gone down for the last couple of quarters. Maybe Q4 is now the stop loss, let's say, and it starts going up. All right, and as for gross margin and adjusted gross margin, EBITDA and EBITDA margin, as you can see, it has been going up. It's now, I believe, at its highest point since a long time, 68.4%. And then for GAAP gross margin, 67.5%. As for adjusted EBITDA, positive $77.1 million. And EBITDA margin, 13.9%. So also going up, much higher than the last 4 quarters. As for the balance sheet and the cash flow, they have cash equivalents, and short-term investment of close to $900 million. Convertible and long-term debt on balance sheet, $1.23 billion. Operating cash flow for the fiscal year 2021, $194 million. And capital expenditures, capitalized software development cost of $64 million. So far, so good. Now, before I go into guidance and the couple of mentions during the earnings call, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. All right, now guidance for Q1 and for the fiscal year 2022. So revenue, they expect for Q1 between $565 and $571 million, representing growth of 25 to 26% year over year. Now, that's a miss because the estimated number was $588 million. Net loss per share was a miss as well. The market estimated a net loss of 51 cents. They expect a loss between 50 cents and 60 cents. But for the full year guidance, they expect revenue to grow between 25 and 30% to between 2.55 billion and 2.65 billion. That's a beat. The market expected an estimated $2.57 billion. So it balanced a Q1 miss with a full year beat. One of the main reasons why this happened is because one major client was supposed to begin with Primary 360 right now. This was pushed back to the second half of the year because of that client's own problems with their data errors, etc. So we're going to see a better second half of the year for Teladoc. Now they also talked a bit about BetterHelp. So BetterHelp did over $700 million in 2021 revenue, really the shining star for Teladoc right now. Mental health visits more than doubled year over year in 2021. Good for the business, not so good for society. If you look at the mental health cases right now, it's on the rise, and obviously lockdowns and everything like that didn't really help much. BetterHelp is also pacing to onboard around 14,000 therapists this year versus 10,000 last year. And if you needed further proof that Teladoc's whole person care approach is working, well, 80% of its 2021 bookings were multi-product versus 70% year to date as of last quarter. And one last thing I want to show you before we end this video. So EBITDA is positive $10.9 million. That's not adjusted EBITDA, that's EBITDA. Then stock-based compensation. Obviously Q4 2020 was a huge hit, $414 million in stock-based compensation because of the Livongo acquisition. Since then, each and every quarter it has gone down. Yes, as the whole 2020, that's also around $400 million. But I expect that number to get smaller and smaller as we move forward. And that's obviously going to help the business and the number you're going to see in the future. So overall, to me, this was a good quarter. Guidance for Q1 was a bit meh, but then again, they reiterated growth for the full year, which is great. Still on track to produce that 25 to 30% all the way through 2024. And as we've seen, it's a cash generating company. Stock-based compensation is coming down. The operations, the company is generating cash. It's just a matter of time until the market will react to that in a positive way. To me, Teladoc is probably going to be a huge winner in this decade and moving forward. It's not just a COVID play. People will still use its services because it's not just telehealth. As we've seen, it's whole person care and the numbers show it. So that will be it for this video. Do leave your thoughts down in the comments below. Have you been buying? Have you been selling? What are your thoughts on this quarter? Leave it down in the comments below. And if you like this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always guys, take care, stay safe, and see you all in the next video. Bye bye.